Good afternoon. It's been that kind of a day, down and down because of negative global cues. You're with us in the last hour. This is Closing Bell. I have Nigel as well as Sonia here with me in the studios. Guys, I don't want to sound very negative, but the thing is that we've not seen any durable recovery today, and that's the difference. Every time you're getting a small bounce, 20, 30 points, it's also getting sold into. And that's a slightly different aspect of trade that at least I've noticed today.
Absolutely. I think the only glimmer of hope is that the mid-caps are in the green. So there's still some buying action over there. But otherwise, yes, across the board, there's profit-taking in the metal space, profit-taking across the board in several large sectors. The Bank Nifty, although it has attempted for a pullback, it's not very convincing. So I think volatility is something that could continue.
Well, few things that I would say that are positive today. One is the number of stocks advancing are more than the number of stocks that are declining. So that's one good point. The other factor, as Sonia mentioned, is that the mid-caps continue to trade in the green. And the third factor, I would say that Nifty Bank last few days has been doing a slippy slide. It's constantly been moving lower. It's at least held on to that 20 DMA. If you just pull up the Nifty Bank and you pull up the 20 DMA, you'll see that at least it's holding around those levels. So you don't want that to break it, because if you break it decisively, then we could see a sharper correction. It's already lost close to around 1,000 points just in the last 3 sessions from the recent peak. So the Nifty Bank at least consolidating, that's okay. Let's see what it does in the final hour or so, because it's playing out that weekly expiry since today is the Wednesday. So keep an eye out on the Nifty Bank. Does it have it in itself to pull back a couple of 100 points? That'll be good news. That's what will take the Nifty back to around the 21,600 odd marks, will be.
Absolutely. And I think, thankfully the Nifty Bank isn't collapsing right now, because otherwise with what IT is doing, and, that's been the other sort of spoil sport in the market today, very sustained selling pressure on most IT stocks. Maybe it's positioning ahead of numbers, or whichever way you want to rationalize it. But that's one key trend today. Lots of selling in IT names. On mid-caps, like Sonia mentioned, just want to, call out some stocks because all is not lost. Look at Paytm, for instance, right now, up about 4%. Look at Biocon, it's surging 6%. Yeah. And then you have some of the odd PSU names. NBCC is doing a nice jig, 8% higher. Ircon is up 6-7%. So, like you mentioned, Sonia, I think that's the happiest part of the market today.
Oh, absolutely. And, there are some spaces which are doing quite well. You spoke about the PSU space, right? Names like NBCC, etc. Look at something like a Canara Bank. It's at, it's up almost about 4% today. Ambuja Cement at a fresh 52-week high today. A couple of other names as well looking pretty good. So all is not lost in the market. The market is still attempting a pullback, although by the end of trade, we may end with a 100-point cut. So yes, there has been a lot of volatility. But let's get straight to how you should be positioning yourself in this last hour of trade. Mitesh Thakkar joins in with some closing strategies. Mitesh, the last couple of days have indicated that maybe we've hit the pause button for now in this rally. Do you think this is just a consolidation phase, or are you starting to get a bit cautious now?
Good afternoon, Sonia. In fact, I've been calling for a consolidation and some kind of a pullback, which would be slightly deeper. I think we've nearly tested 21,480 on the Nifty, which is my pivot level. And the structure on the intraday chart is still weak, but this doesn't look like something which will start a big correction, because the daily and the weekly chart still remain strong. So my sense is that it could be either 21,480 or, in the worst case scenario, in the short term, 21,200. So we'll just wait and see it out. But yes, trading with a bit of caution, and it's the IT sector which is still looking, worrisome to me, because that's where a couple of stocks have given breakdown. But that apart, I think the market looks pretty fine. And the Bank Nifty has kind of stabilized after the decline yesterday. And other stocks, if you look at the breadth of the market, heavyweight stocks in capital goods or energy sector, I think they look pretty decent. So I still have on an overall basis, I still believe that this is not a big decline or a big correction, start of a big correction, but more of a consolidation. And as you rightly said, we've kind of hit a pause button, which means that short term could be slightly raised and choppy. On the stock side, I have a buy on Shriram Transport Finance. That's a buy with a stop at about levels of 20.55 and a target of 2100 is what I would pencil in. And Siemens is the other one. That's a buy with a stop just below today's low of 4,053. And look for a target of around 4190.
All right. Okay. Mitesh, thanks a lot for that. Well, the Nifty Bank is definitely making an attempt to recover. In fact, I think the Nifty Bank will, by the time we end, perhaps even end in the green. So now just down about 40 odd points, recovering quite a bit from its lows, as you can see. But the Supreme Court, in its judgment of the Adani Hindenburg case, has said that there is no ground to transfer a probe and asked SEBI to complete the investigation in 2 cases in 3 months. Ashmit is now joining us. to tell us more on that. Ashmit, over to you.
Well, an important judgment coming in from the top court. Here are the key takeaways. Number one, the Supreme Court records that SEBI has completed 22 out of 24 cases for investigation. 2 are left, and these 2 need to be completed within 3 months' time. For the 22 that have been completed, Supreme Court has directed for SEBI to take them to their logical conclusion. There have been 3 questions on which the Supreme Court has given an unequivocal no. Number one, on the question of parallel investigation by the CBI, Supreme Court says no case made out. Also says no case made out in terms of allowing for the reports such as the ones that appeared in the Financial Times, the OCCRP report, the Hindenburg report, that they cannot take precedence over existing investigations by institutions such as the market regulator SEBI. There is also a big no coming in for conflict of interest questions that were raised against members of the expert committees that had been formed by the Apex Court. Having said that, on the way forward, the Supreme Court has said that while the existing regulations have been tightened, the SEBI as well as the government may look into suggestions that have been made by the expert committee on tightening, on strengthening of existing regulatory frameworks, and finally also saying that there is a need for an investigation by SEBI into the conduct of Hindenburg in terms of short selling, whether it caused any infraction of Indian law and whether any suitable action is required. Now, I reached out to former Attorney General Mukul Rohatgi as well as senior advocate Siddharth Luthra. What they tell us is that this is an exoneration for Adani, exoneration by way of the fact that no parallel investigation, criminal investigation has been directed, and also that this is an affirmation for SEBI's investigation over the Hindenburg report, and that this is also an affirmation for existing regulations for investor safety.
Okay, all right, Ashwin, thank you very much for wrapping up all that important court action for us. Let's open it out with today's fundamental guest on the show. The first guest we have is Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sudeep, good afternoon. Good to have you on the show as always. When this entire saga played out, it was a huge market issue as well. It was all about sentiment and, there's just too much volatility. Do you think now this issue has been completely put to rest, A, and B, more importantly, for this group of stocks? Do you see more sort of, action on the buy side? Does it completely put to rest any of the uncertainties around? And what would your course of action be for some of the bigger Adani Group stocks?
Hi, Surbi. Of course, with this judgment of Supreme Court, to a great extent, the entire Hindenburg saga has been put to rest. Of course, there are 2 cases which SEBI is still investigating and they need to complete. But when Supreme Court took a stand that this doesn't need any further investigation by any other authority other than the market regulator, I think that's a kind of an exoneration of the Adani Group itself. If there are any market violations, that the market regulator will find out. And I think the regulator has given by and large a clean sheet. On the 22 cases, they have completed investigations. The residual 2-3 months time they have. So by and large, I think the group as well as market will heave a sigh of relief. And pretty much that's getting reflected in markets today where all the Adani Group stocks have moved up significantly. As far as, the fundamentals are concerned, I have been always liking, Adani Port. And I think that's one stock which I will continue to recommend to my investors. All these Hindenburg reports and Supreme Court rulings has pretty much no impact on the fundamentals of Adani Port. I think it's a great asset which they have created. And with, having presence in both eastern and western seaboard of India, with Indian exports and imports continuously moving up with the GDP growth, I think this is a sure shot winner. So there's absolutely no hesitation in recommending that stock. The other 2 stocks which recently came to the group definitely also merit consideration. One is Gujarat Ambuja, the other is ACC. We are bullish on infrastructure, construction, real estate. Now, obviously cement will definitely do well. And with the aggressive, the expansion plans which the group has drawn up, I think both the cement companies will do well going forward. So for a long-term investor, even these 2 are a good buy.
Okay, well, for a long-term investor, these 2 are good buys. Got it. I just wanted your thoughts on a couple of more stocks. So let me get straight to that. One of the stocks in focus is Samvardhan Motherson. So, let's just get that on board. Money control sources have said that Japan's Sumitomo Wiring Systems is looking to exit Samvardhan Motherson entirely. They are looking to sell their entire 14.1% stake that they have in the company. Sumitomo Wiring stake, remember, is valued at over 10,000 crores at the current market price, and they're looking to sell their stake at about 110 to 120 rupees a share. Now, we reached out to the management and they said they don't want to comment on any market speculation. But if this happens, this is actually an overhang that will be off from the company. This was always known that Sumitomo wanted to exit Samvardhan Motherson. So this overhang will be out of the way. Sumitomo is still invested in Motherson Wiring, which they wanted to hold on to for a while. They hold about 25% there. Once the block is consumed, the long pending overhang on the stock though will be out of the way. The reason the stock is now down is because of the supply pressure that perhaps could be kicking in, or the expectation of that. But otherwise, once this overhang is out of the way, it could be a positive for the company. In fact, let me just go back to our guest. Do you have any thoughts, Sudeep, on Samvardhan Motherson? I mean, this was, of course, a long-standing issue. Sumitomo was planning to exit for a while. Now, sources tell us that they will be doing it very soon. They'll exit that 14% stake. But from an investor standpoint, how do you approach it?
Well, two things, Sonia. One is obviously Sumitomo wants to be in the company which is relevant to their future, which is the wiring company, and that's where they want to concentrate on. They want to get out of Samvardhana Motherson. They will have their own use for the funds, and it's only fair that investor who has been invested in the company after a point of time does get an exit. And you're absolutely right. The market is reacting because there is an overhang, and there's a fear of the stock coming anytime in the near future. So that's the reason why this overhang is kind of troubling the market. But you're right in saying that once this is done and dusted, I think the stock will be in a much better position. And because we are expecting that to happen anytime, and if it does happen, there will be a correction in price for some time. But to my mind, that will be an excellent opportunity to buy into the stock. It's a fantastic company with businesses which encompass the entire auto ecosystem. They have global businesses as well, and it's a very well managed business and managed concern. So a correction because of Sumitomo getting out will be an opportunity for acquisition.
Okay, all right. Sudeep, hi, good afternoon. I wanted your view on Biocon. That one has done a big spike. I recall it went down to closer to around 200, but from there it spiked up closer to around 280. What's your view on the stock?
Overall,
just hold on to that thought, Sudeep. Just hold on to that thought. One stock that's moved to the high point of the day while the Nifty's moved to the day's low is Bajaj Auto. And the reason is they're going to be considering a share buyback on January 8th. Well, Sonia, tell us more about this. The news has just hit the exchanges. Explains why the stock has spiked up.
Oh, absolutely. And, we don't know the amount or the price. It's not mentioned in the press release, but we do understand that there could be a buyback of around 5,000 crores that the company could announce via the tender route. There is no confirmation on the price or the size, etc. But as you said, there will be a board meeting on the 8th of January at 4:30 p.m. That's on Monday, to decide more about the price and the size. Now, if you remember, last time around, the company had done a buyback. It was in June of 2022. There was a lot of back and forth at that point in time. First, they announced the buyback, and then they deferred it, and finally the buyback price was about 4,600 rupees up to 2,500 crores. This time around, we understand it could be higher than that. In fact, Rajiv Bajaj of Bajaj Auto is joining in this afternoon to talk about that. Rajiv, Happy New Year to you, and thank you for joining us on the show. If you could just confirm to us, of course, the buyback has been announced, but if you could just explain what the rationale behind this buyback is.
Hi, Sonia. Happy New Year to all of you. Although I must say that 2023 was treating us so well that we have reluctantly crossed into 2024. Yes, we were supposed to notify the exchanges today that we will be doing a buyback, and the board will meet on Monday at 4:30 to decide upon the details. I heard you say there was a lot of back and forth the last time. I want to say that is not entirely true, because we only had a second meeting to finalize details the last time. Hopefully we don't have to do that this time. The rationale, quite frankly, is this, that as I said, we've been having an outstanding year. You've seen the results for the first half. You've seen hopefully what we have clocked in the third quarter in terms of sales from different verticals, a new record of 1.2 million vehicles sold in a quarter, in quarter three. So I can't elaborate too much because we have results later this month, but obviously we've had a record quarter. And, at the same time, we have over time re-engineered our business such that, despite the fact that we keep investing in new technologies, products and markets, as you've seen with the Pulsar, KTM, Triumph, Chetak, electric three-wheeler, Brazil, etc. But, like was the case 31st of March last year, we will again end up at close to 20,000 crores of cash this year. And, I don't think it's smart to sit on all that money. So one could give it away plain Jane dividend, or one can do it a little more efficiently, let's say, through a buyback. So I think it's a no-brainer.
Okay, well, that's great to hear, and your shareholders are rejoicing. The stock has now moved to the highest point of trade, up 2.5%. Rajiv, I know you don't want to talk about the size, the quantum, etc., but we understand that it could be much higher than what you did the last time around. Is it fair to assume that?
Yeah, I'm really having to hold myself back from talking about it because I'm not supposed to talk about it till the board actually meets to decide on that. But yes, I can say that it would be logical that since this year is turning out to be much better than the previous and even better than what we expected at the start of the year, so certainly that would point towards a more significant buyback than we did the last time. But again, that's something the board has to decide on Monday.
Okay. You're also sitting on a huge cash pile, as you said, and there are different ways to sort of give back, right? One of them, of course, is the buyback route. But anything else? I mean, what is the plan that you have with the cash on your books, say, over the medium term?
As my father would always say, he was very happy to keep the cash under his pillow every night. He said he slept very well on that basis. But no, more seriously, we are obviously investing strongly in the business. If I may elaborate, you've seen the entire Pulsar lineup being refreshed and the impact in the marketplace. Rakesh spoke with you all day before to say that in all probability we have wrested the #1 position in the 125cc plus segment. So other than the 100cc motorcycle segment as far as domestic sales are concerned, and I think he's still awaiting the last bit of industry information on that, but we are in #1 position there in all probability. We've invested in a new plant for KTM in Chakan, which is on stream now, so we've needed to invest in that. The Chetak has moved up very smartly to clearly over 10,000 vehicles a month, so there's a lot of investment in that, in technology and in facilities. The electric three-wheeler we launched in May last year. We are close to, I think, leadership in the next, or in this quarter, as far as e-autos are concerned. And while the export business is still flattish around 140,000 a month, but, we are investing in markets, most importantly Brazil. And, so we are doing what we need to do for the business. But yes, it's a very profitable business, a 20% EBITDA, as you have seen in Q1, Q2. The exchange rate is very favorable. So that explains the excess cash.
Okay, it's a great position to be in, I guess. Enviable position, Rajiv. Hi, good afternoon. Surabhi here. Season's greetings to you. Wish you a happy new year. So you mentioned, it's only the tax bit, right? The tax efficiency, because if you give out dividends and they're taxable at the slab rate in the hands of shareholders, and the buyback perhaps is a little more efficient. Is that the only reason that you're looking at a buyback?
Well, that's obviously a very, very important reason. And for whatever salutary effect that may have in terms of earnings per share, etc., obviously no single buyback like the individual rung of a ladder gets you anywhere. But, if you do it progressively over 5-10 years, then, you find yourself in a different position at the end of that process. So I think, or rather, I would like to believe that the board would conclude that doing this is better, more efficient in the short term and in the long term than just a plain Jane dividend.
Your shareholders are absolutely loving every bit of what you're saying, Rajiv. The stock is surging as we speak. It absolutely is. Yes. I think 3.5% right now since we started this chat. 20,000 crores of cash. I know you can't talk about how much you plan to give back to shareholders right now. We'll have those details only after the board meeting is over. But just when you look at the business and you're looking at the investments also that you would be making over the next 1 to 2 years, give us some sense on the utilization. How much will go in the business organically? Would you look at more inorganic? And also a sense of the blended capacity utilization level across the plants that you'd be operating at now.
Okay, so let me go in reverse order there. I think our capacity is around 500 to 550,000 vehicles a month. The reason I say approximately is because it depends on the mix, the blend. I would like to believe that, I just said that we had a record quarter of 1.2 million vehicles sold in Q3. Of course, that's the peak quarter because of the festive season. But I would like to believe, from what I know of, our product plans and sales and marketing plans for this quarter, that we can repeat the festive quarter in Q4 as well. So I'd like to think that sales every month will start with a 4. And I can tell you the breakup roughly. I'm hopeful that the domestic motorcycle business between Bajaj, KTM and Triumph should be close to 200,000 motorcycles, driven primarily by the Pulsar. I heard you say earlier that the market rally has pressed the pause button, but remember there is no pause button on a Pulsar. So Pulsar will keep going. We have many launches planned for this quarter under that brand. I'm hopeful that Chetak will cross over into 15,000 territory per month in this quarter. I'm hopeful we will maintain the momentum on our domestic three-wheeler sales at around 40,000 a month. And I think exports will still remain stable at about 140,000 plus minus a month. So I think all of that would add up to about 400,000 a month. January may be a little weaker, March may be a little stronger as we head into the marriage season. So that's one. And to just respond to your previous questions, it is best that I share with you what we have done in the past. One, typically our capex every year is only about 1,000 crores. When our PAT is now looking like it's going to be, more in the region of 7,000-8,000 crores. So obviously, we are generating far more than we need to invest. And finally, our dividend policy, which is a public document, clearly states that whenever we have in excess of 15,000 crores sitting on our books, we would like to give away anything more than 70% of that through a combination of dividend, buyback, etc. And last year we did give away, I think we gave away more than 100%. So I think we're going to just simply stay true to the dividend policy.
Okay, this is actually the most optimistic I've heard you in a while, Rajiv. So I don't know why you're coming.
Talked to me in a long time.
I haven't spoken to you, but I've heard you, right, in the recent interviews. So this is the most optimistic. And I don't know why you're complaining that 2023 was good, so you don't want to move into 2024. 2024 could just be better than the previous year.
And this is a big change, Sonia, from what we heard Rajiv, and Mr. Sharma when they joined in. They're very cautious. Suddenly, it appears they're revving up the engine a little bit.
Yeah, they are for sure. But okay, can you leave us with one more data point on the market share, especially in the 125cc plus segment? Because the market is growing there, your own share is picking up, and 70% of your business comes from there. So what's the latest?
So the reason Rakesh didn't share that is because we still don't know the data of one major competitor. But from what we know, and then we've hazarded a guess about that one company, our estimate is that our 125cc segment market share has moved up very sharply to about 32%. In the Pulsar segment, which is the 150-250, we're probably closer to 42%. And in the 125cc plus, where we believe that we may now be in a leadership position in the domestic market, we would probably be about 35%. Now, that may be 34 or 36, depending on what we get exactly by the end of the day or tomorrow morning.
Okay, all right, Rajiv, thanks so much for joining. And Rajiv, before you go, I want to tell you that I've been riding the Triumph. We, as a family, we buy a lot of bikes, and we bought 2 Triumphs in our family, in my family building that we stay in. And I ride it almost every second day. It's very, very good. Take care of your shareholders. But if you can come up with some bigger bikes as well, now, even the customers will be very, very happy. So shareholders will be happy with this dividend payout buyback. Come up with some bigger bikes with the kind of cash balance you all have. we'll be very, very happy. But congrats, and we look forward to further details on this buyback as well.
Thank you, Nigel. Thank you for that homework, and pass on my commiserations to Anuj for his Harley Davidson.
Maybe all three of you can go for a ride together sometime, you know.
Why not?
I'll take them for a ride, don't worry.
Okay. All right.
Just don't take your shareholders for a ride, Rajiv.
They're already on a ride. Look at that stock. The shareholders are loving this ride. When we started the conversation, I think the stock was just 1% up or thereabouts.
Yeah,
As we
5%.
say bye to Rajiv, the stock is soaring, 5% up. What a move on Bajaj Auto in anticipation of that buyback. 20,000 crore rupees in the bank, on the books. And Rajiv saying that the board will come up with the specifics on Monday.
And I think, through the course of the interview, just the fact that the sentiment was so positive,
Oh, yes.
he was very optimistic
Yes.
about demand trends, very optimistic about, he also said the 35% market share in the 125cc plus segment, they're market leaders in that segment, which is picking up a lot. I think all of that is working very well. So, of course, there's a buyback on one hand, but the growth in the business and the body language of the management.
When a manufacturing company tells you they need to invest only about 1,000 crores every year, they're getting 7,000 crores in profit in that same year. Yeah. It's just saying so much about the, just the nature of that business, the quality of that business.
Well, let's get back to the markets though, guys. When we're having that chat with Rajiv, if you just pull up the Nifty and you pull up what Bajaj Auto stock has done. Nifty moved to the low point of the day. We were down close to around 130, 135 points. Bajaj Auto, though, is up close to around 5%. So both of them doing a thing of their own as we speak. The Nifty Bank, though, that's still down 30 points. We have 30 minutes to go before this expiry. So let's see whether or not the Nifty Bank has a trick up its sleeve. For the time being, slip into a short break, come back. We'll get chatting with Saurav Mukherjee, founder of Marcellus Investment Managers. You stay with us. Welcome back. Well, as we speak, Bajaj Auto is definitely the stock of the moment. But also, if you look at a holding company, that's Bajaj Holding and Investment. I'm looking to the shareholding pattern. And Bajaj Holding has 34% in Bajaj Auto. Explains why Bajaj Holding as well is running behind Bajaj Auto as we speak. So just thought we'll point that out. Currently moved to the high point of the day. But as promised, let's get chatting with Saurav Mukherjee, founder of Marcellus Investment Managers, who joins us on this show. Hi, Saurav. Good afternoon, and wishing you, your team, the best for 2024. Hopefully, it's going to be a stellar one for you, your team, as well as your investors. Tell us how you're feeling right now. A little bit cautious, or do you continue to remain constructive on our markets?
Well, firstly, Happy New Year to everybody at CNBC-TV18 and your viewers. I think there's sort of balanced optimism, guarded optimism in Marcellus. I'll give you three positives and three negatives as we go into this result season. So firstly, we're seeing a reduction in Chinese dumping. So the data on Q3 on imports has come in. So the December quarter data on imports has come in, and the Chinese seem to have decided to dump less in India. That's good news for the specialty chemical holdings that we have, say companies such as alkylamines, GMM Pfaudler. We are relieved that the Chinese have decided to dump less in India. How long this will sustain is something we are trying to figure out. However, on the negative side, I think exports from India into other countries are continuing to be weak. So not just IT services, which is a well-known story, but even say Eicher Motors, which is one of our holdings in our mid-cap portfolio, the export data suggests that the exports of motorbikes from Eicher have been weaker than we expected. We continue to remain invested in Eicher Motors largely as a play on Royal Enfield and VECV, but I think manufactured exports from India is still tricky territory. Secondly, on the capex side, private sector capex isn't recovering at the pace we thought it would recover. We are expecting to see private sector capex pick up, but even now it continues to be a story largely of government capex. We'll have to do some more work to figure out why private sector capex isn't taking off. But on the positive side, the building material story, the real estate build-out story continues to grow from strength to strength. So in Little Champs, we've added a company called Everest Industries. This is the market leader in pre-engineered buildings. These are prefabricated factories, warehouses, large offices. Amongst the listed companies, Everest is the leader in India in this industry. So we added Everest Industries as a play on the entire building materials and construction boom that we are seeing in the country. And thirdly, on consumption, anything which is not financed by the banks and NBFCs, I think consumption remains weak. I think the GDP print on consumption for Q2 was a shocking 3%. But even through November, December, our reading is consumption remains weak. On the other hand, the banks and the NBFCs, I think, will once again have a bumper quarter. So our holdings in Bajaj Finance, Chola, HDFC Bank, Kotak, we continue with that. And just a disclaimer, I'm invested in all of these stocks, as are my parents and as are our 9,000 clients.
Okay, Saurabh, hi, good afternoon. I wanted your thoughts particularly on the two-wheeler space because, we just had this chat with Bajaj Auto, and they are very optimistic on growth going forward, especially in the domestic market, the 125cc plus segment. But do you think you can extend this to the entire sector? And as an investment opportunity, what are your thoughts now?
So look, I think I share a lot of the optimism that I heard from Mr. Rajiv Bajaj. Our channel checks, the travels that we're doing around the country does suggest that wherever financing is available, and financing is certainly available for two-wheelers, the demand story will continue to go from strength to strength. Remember, we seem to be at the peak of the interest rate cycle. So over the next 2 years, interest rates drop down by 2%. That should give further fillip to the entire auto demand story. What remains a little bit of a puzzle is the small car market, right? Basically the Maruti end of the market. Whilst SUVs and the luxury end of the car market in India is thriving, the small car market simply isn't moving. And we're trying our best to figure out what's going on here. We're not shareholders in Maruti, but we keep looking at the stock and keep trying to figure out why is the small car market in India stuck in a funk for so many years now. But the two-wheeler space, and specifically our investment in Eicher Motors, we feel very positive about. All the channel checks suggest that in spite of the weak December data, two-wheelers, especially high-end two-wheelers, the sort that Nigel drives, that I think is going to be a growing story over the next few years.
Oh, yes, absolutely. I guess it's been all about 2023 was a year of the big bikes. So many new launches, so much enthusiasm.
Too less money, but
You were asking Mr. Rajiv Bajaj to make bigger bikes.
Bigger
Don't
bikes.
talk about too less money.
I'm on a 650 Surbhi today. A 650. I want bigger. I don't mind paying more, but I want bigger. You know, I've gone from the 350 to the 550 to the 650. Now, if you get me bigger, I'll buy bigger.
So, see, I think that's the story that's playing out in the market as well. Premiumization, right?
Otherwise, I have to depend on Fufaji and, you know, and Chacha to buy it and then try.
Oh, okay. Sort of that actually brings me to the question that I had on my mind. By the way, season's greetings to you. Wish you a very happy new year. You mentioned the lack of pickup in regular consumption, right? And we've kind of been grappling with that all through 2023. You know, what do you think will happen here? Because when we speak to sector analysts, most of them are expecting a very muted quarter again, December. I'm talking basic pure play FMCG, you know, anemic volumes to continue. Do you see that changing at all? And what's going on? Is it just that the market perhaps is saturated and consumption has really shifted to the premium and top end? And is that trend simply going to last?
So I think there's a story of premium consumption. I think that's always been there. Perhaps the premium end is getting even more premiumized, as you were alluding to in your discussion on bikes with Nigel. But I think what seems to have happened to the Indian middle class is many of them have over the last couple of years become homeowners, right? And effectively, when you become a homeowner, you're going from a 2% rental yield property to paying an 8% home loan, right? And the record mortgage disbursals data that the banks and NBFCs are backing out suggests that a big chunk of the middle class have shifted from being in a rented property where the yield is pretty low, 2%, 2.5%, to buying a house, and a big part of your disposable income thus ends up going on paying your EMI and on doing up the house. Hence the rip-roaring demand for building materials, but at the same time weak demand for small ticket consumables. I think that's broadly the story here. I reckon we'll need a couple of years of pay rises and a decent job market, specifically in sectors like financial services, IT services. We'll need 2 to 3 years of pay rises to offset the lethargy or the drag that this wave of home buying is creating on small ticket consumption.
Okay, you know, there are a lot of big events lined up, right? There's a union budget, but of course that's expected to be just a vote on account. Apart from that, there is the election and there are a couple of others. There's the RBI policy as well in the month of February. What do you think could be a market-moving event this time around? And what are your key expectations, say, from some of these large events like the budget?
Look, I think on budget, what will be very interesting to hear is what the government plans to do post-elections, right? Remember, the big story of the last 4 years has been almost a tripling of government capex, right? Unprecedented in Indian history, tripling of government capex. That's driven a whole bunch of PSU stocks and suppliers to the government sector, railways, defense, aerospace, and so on. Will the government sustain that scorching rate of capex, especially since at the small ticket segment of the economy we are seeing sluggishness, or will the government indicate that post-election there'll be a swing away from the capex piece to subsidies and the OPEX piece and supporting low-income consumption? Will the government indeed give a signal that pre-election they'll support low-income consumption? Because that, I think, will have a big bearing on how the FMCG stocks go versus how the government capex plays go. I think the second thing that we're all looking to the RBI for is a signal as to when the RBI believes that inflationary pressures have been quelled. Now that China seems to be slowing down rapidly, the West seems to be heading into recession, commodity prices are subdued. Will the RBI now give the green signal that sooner rather than later we will see rate cuts, or will the RBI try to still say that rate cuts are still far away, boys and girls, focus on the fact that we're still fighting inflationary pressures? Liquidity is tight in the system. In my mind, inflationary pressures have largely been dealt with globally. So it'll be interesting to see how the RBI articulates its message on inflation fighting.
All right, Saurav, you know, we had a very good showing in 2023. So 2024, the expectations are sky high as well. What would you communicate, you know, to your investors, our viewers as well? What should they be satisfied with, say, in the next 12 to 18 months, given the kind of heady run that we had in 2023 and the fantastic finish that we had, which makes 2024 more challenging?
So I think in large caps, we don't see that much of an issue, whether it's our large caps consistent compounders portfolio or more generally in the country. The Nifty gave 17-18% earnings compounding for large, well-run companies in India is north of 20%. So I don't see a valuation challenge in large caps. But in small caps, we are worried. We're worried less about Little Champs, where there wasn't any big run-up. In fact, Little Champs is flat YOY. But the general, the small cap space, there's something like 200, 300 stocks which are up 100%, 200% over the last couple of years. Small cap index itself is up nearly 50% YOY without underlying earnings support. I think that's where there is a valuation challenge. And it'll be interesting to see how our regulators deal with this challenge. Much of the retail interest that's come into the market over the last couple of years is focused on small caps. Can we get a soft landing in this scorching small cap rally? I think that's the big question mark for me in 2024.
I guess we'll have to just wait and see how this year shapes up. Hope it's a good one for you, Saurabh, and your investors and your team. Thank you very much for joining in. We look forward to more conversations through the course of this year. By the way, check out the market. This has become a bit of a sell on every bounce market, and we haven't said that about the market in a while because we've just broken the lows of the session. Fresh lows right now, lowest level of the day on the Nifty. Pull up Reliance. There's a lot of selling that's happening over there. Pull up something like an ICICI Bank, perhaps. We're seeing prolonged weakness. And metals are seeing serious profit taking. Perhaps it's got to do with just the global mood. Markets coming back after the New Year holiday, and the dollar, had a big decline, a 1% decline overnight, if you remember. So metals are weak, but along with IT, now you have some of the other names like Reliance, which are adding to the downside pressure. 21,500 under question. Let's see. So good time to bring in Nimesh. Figure out what the word is in dealing rooms. Nimesh, this is a bit different. Typically, we talk about buying the dips. But those buyers haven't had much luck today.
Looks like, in fact, the sense I'm getting is maybe the January factor is playing out. At the start of the series, we did highlight that January is typically a weak month, and looks like, that's the trend. So for the second day running, the Nifty is under pressure. Yesterday it was dragged by banks. Today it's dragged largely by the IT names. So that's something which is dragging the markets down. But again, the feedback is that it's not dragged by large FI sell flows. So the flows are quite mixed. In fact, there is a selective buying in the mid-cap basket from the larger institutions. That's the overall feedback from a flow perspective. I've been saying for the last few days that there is a bit of a sector rotation going on a daily basis. So today, for a change, the NBFC stocks are buzzing in trade, and a bit of profit booking is seen in the metal names today. So that's a sector perspective. But again, the PSUs continue to outperform. So within the PSUs today, the OMCs are doing good, and they're well bid as well. And some bit of traction seems to be quite there in the rail PSUs from the larger retail and HNI investors. So that's playing out in the broader markets. But clearly, while the Nifty is down, largely dragged by the tech stocks, from a flow perspective, it's not that it's very large selling, but it's a selective buying in the mid cap and small cap.
Okay, I want to talk to you about individual stocks, but I also want to first congratulate you. I remember you alerted us about Bajaj Auto and the fact that there is something brewing over there. There's some sort of buyback perhaps, and it's announced today. So congratulations on that. What else are you looking at today, Nimesh?
Thanks, Sonia. So, in fact, from December 12th, when I put it out on Deal Street Chatter, the stock is up almost 14%. So, it's done well. In fact, I'd hinted that maybe you'll see a further clarity on the capital allocation policy. So, I was kindly hinting towards the buyback. So, it's already done now. So, let's see what they come out in the bond meet on Jan 8th. Okay, in terms of today's stocks to watch out for, in terms of big chatter, the first stock on my list is GlaxoSmithKline Pharma. That's been buzzing for the last few days. Quietly, the stock is up within the pharma basket. The volumes are on the higher side, and I understand some bit of institutional interest seems to be back. So, in fact, a couple of domestic mutual funds, I understand, are quite active buyers in Glaxo Pharma of late. So, that's the first one. The second name is EIH, East Indian Hotels. The entire hotel basket is doing good for the last few days. EIH today stands out purely on back of buy flows. So, expect high delivery volumes, and there is a bit of institutional interest back in that particular stock as well. The third name is PC Jewelers. For second day running, that's been buzzing on large volumes. In fact, yesterday the stock was 10% upper circuit. Today also up 5-6%. The volumes on the higher side. The large buzz on the street is that maybe you're going to hear, the debt resolution with the banks very soon in PC Jewelers. So that's keeping the stock exciting. And the last one is Engineers India. Again, part of the PSU basket. You'll keep hearing some of the other stocks doing good. EI stands out purely on back of good flows. And also there is a strong buzz that maybe the company is going to bag a very large order from a Middle East company very soon. So that's the reason why EIH has been buzzing off late.
Okay, all right, Nimesh, thanks a lot for that. We'll keep an eye out on all of those stocks. For the time being, we'll slip into a short break. You come back, we'll tell you some buy and sell trades for a reverse trade in the coming days. You stay with us.
Okay, we are winding down what has been quite a disappointing day actually for the bulls. So we'll close with about 150 points lower on the index. Mitesh is back with us to tell us what we should be doing. Mitesh, this is starting to get a bit uncomfortable for the bulls now. What's the call at this point in time, and what's the BTST trade for tomorrow?
I'll take a STBT trade, Sonia. Given the
Sure.
fact that I still believe that short term could be more choppy. Grasim is a STBT with a stop at about 2081 and look for a target of roughly around 2040 here. And Tata Steel is the other one. Again, on the STBT side, keep a stop at about 137 and 137 quarter and look for a target of around 132.
Okay, all right, got that. Thanks a lot for that, Mitesh. Well, let's move on then. Ace investor Mr. Radhakrishan Damani picked up an additional 1.4% stake in VST Industries, taking his total stake in the company to around 34%. Hormuz, well, he's been at it with regard to the numbers. He joins us to highlight Mr. Damani's top holdings and the value of his holdings. Hormuz.
Well, as we all, the VST Industries, the block deal that happened yesterday, and Radhakrishan Damani emerged as one of the buyers in that block deal. The stock ended 20% higher yesterday. And before that, Avenue Supermarts, of course, as we all know, he's the promoter of the company there. But besides Avenue Supermarts, VST Industries has now become his second largest holding. As you said, he now has a 34% stake in the company, which is valued at over 2,000 crore rupees. Other than that, the other company where Radhakrishan Damani has gradually kept on increasing his stake over the last few years is India Cements, and the value of his stake, the stake of him, his brother and other entities combined together is now up to around 22.7%, and that is valued at over 1,850 crore rupees. So India Cement is the third largest holding that he has. Other than that, the other major holding that he has is Trent. Now, in the Tata Group company, he has it's only a 1.5% stake, but the surge that Trent stock price has seen in 2023 has ensured that the holdings now, that 1.5% holding is valued at 1,650 crore rupees. The other major one is Sundaram Finance, where he has a 3.5% stake. Two entities there hold stake in the company, and that is around 1,300 crore rupees. And United Breweries, where that 1.2% stake is valued at close to 600 crore rupees. But besides that, there are other minor holdings that Radhakrishan Damani has as well, and those include companies like Blue Dart Express, Sundaram Finance, Aptech, BF Utilities, Advani Resorts and Mangalam Organics. Now, to compare the performance of the top holdings, the two major holdings, they did not do very well in 2023. VST Industries was up only 3%, while India Cements was up only 18.5%. But as I said, what did very well was Trent. The stock doubled last year, and that resulted in the rise in his holdings. Sundaram Finance was also up 50%, and United Breweries was another underperformer with a rise of only 5%. But the stock of the day highlight of yesterday was VST Industries, with Radhakrishan Damani being in focus. Back to you.
Okay, all right. Hormuz, thank you very much for that. Definitely in the limelight with those high-profile blocks happening. Well, with that, let's move on and say hello to Mayuresh Joshi, Head of Equity Research at William O'Neill. He's with us on the show now. Mayuresh, thank you for joining in. Wish you a very, very happy New Year. New Year has gotten off to a bit of a wobbly start. But what do you make of things? I mean, in specific, the kind of shakeout that we're seeing in the market today, what are you telling investors? Buy the dip, or perhaps good to take some money off the table?
Afternoon, Surbi. First of all, yes, wishing you, Sonia, Nigel, the entire team at TV18 and all the viewers of TV18 a very healthy, wealthy and a prosperous 2024. Obviously, with the move that the markets have given in the past few months, and the kind of levels that we are now trading at, there is some bit of caution that is warranted at these levels, specifically at the broader end of the markets, because the kind of exaggerated moves that you've probably seen, we're seeing at markets with India, a lot of stocks in late stage basis, which means they have moved so significantly higher from their moving averages and their initial basis that they had created just a few months back, that it's making a very difficult proposition to probably have a uniform call on the broader markets as we speak. Selectively, I think we are bullish and optimistic on certain sectors. Obviously, domestic cyclical still expected to do well selectively, with expectations of government capex expected to continue. And therefore, manufacturing, capex, engineering should continue doing well, both from an earnings perspective, which should also reflect positively in terms of price action for the better part of the next few quarters as we go ahead. The second basket would obviously be very, very selective in terms of financials, mid-cap IT, and some consumption-related stocks. Because our feel is that FMCG companies generally for this quarter, numbers will be extremely critical as far as volume growth is concerned. If volume growth is subpar to what the market probably believes, the kind of run-up that we've probably seen for the index itself and the valuations that it probably trades at, they might succumb to some element of profit booking. So remaining selective in terms of domestic cyclicals, a few stocks within the financial and the IT basket as well.
Okay, all right. Mayuresh, just stay with us. Before we slip into the short break, just wanted to highlight that the markets are at the low point of the day, but still there are a couple of stocks actually that are moving higher as we speak. Genius Power is one such stock. From the day's low, it spiked up. In fact, post the recent, the stock went to close to 300 rupees, corrected closer to around 220 rupees. Now, in fact, it's moved up to the high point of the day as we speak as well. So that's one of those stocks that are doing well. And Biocon, as we highlighted earlier, that as well is spiking up. For the time being, slip in a short break. Come back, we'll wind down the markets. Let's see whether or not there is any kind of pullback from around this 21,500 mark.
Welcome back. Well, just 5 minutes to go before the day closes out. Mayuresh, I want to ask you about large cap IT and what you'd advise over here. I mean, the nerves are already showing up as we get into the earnings season, and I don't think anyone's expecting a blockbuster print out there. But how are you positioned on TCS, Infosys, or any thoughts even on Wipro, where there's been so much sort of management churn as well?
Well, absolutely. I think there have been too much in the news as far as the order loss for Infosys was concerned, or the management change as far as Wipro was in the news for. But a large part of what the market largely believes would be in this quarter, which is typically expected to be a weak quarter anyways because of furloughs, Christmas holidays, and because a large element in terms of wage hikes has already been embedded into the EBIT margins as well. The market probably believes that this quarter, along with the traditional weakness that probably the sector witnesses, might also exhibit slowness in order wins that can get reflected to management commentaries. And therefore, some tweaks in terms of revenue expectations that need to be adjusted, at least for the first half of the next financial year. Having said that, the kind of valuation gap that is now widened, they are in fact trading at much attractive valuations compared to mid-cap IT as a space. But I think these 2-3 concerns are still probably plaguing how the numbers will be. A, order wins maybe slow down over there. B, in terms of discretionary spending, when the next quarter will probably determine a lot of discretionary spending patterns, both in the US and European zone. Maybe that gets delayed by some periodicity of time that gets reflected on margins as well. And third, management commentaries often witnessing some element of softness as far as even pricing is concerned. So I think markets are probably expecting a soft quarter to probably come along with weak commentary. And therefore, mid-cap IT selective survey can still continue doing well in our.
Okay, all right. Hi, Mayuresh. Mayuresh, what about some of these PSU? You know, just around 20 days, I mean, not even 20, 15 days or so ago, everyone was very interested, be it Nalco, be it a BHEL, SAIL, and I'm spotting these stocks because all of them are down between 3 to 6%. Would you look to buy these stocks into the dip? I think, you know, we have been watching the market together actually for the last 10, 15 years at least, and they have disappointed periodically. But has its time come now? Will they do that cleanup, you know, and will they get that valuation that some part of the street believes they should get?
So I think the PSU run-up was something like what Mohammad Siraj right now is doing, Nigel, with the South African team. I think they had been on a roll. And absolutely, I think the kind of price action that was witnessed for most PSU stocks in the last 1 year has been outstanding. Having said that, I think the only concerns that the street probably has is A, obviously valuations compared to the long period averages, and B, the execution cycle itself, because the order book is no longer a concern. The revenue visibility exists structurally over the next 7 to 8 years. But for them to execute the order, fresh capex will probably need to get put in either brownfield or greenfield to probably ensure that execution probably happens in the right stead in the next few quarters, which probably means that the working capital cycle cash flows would remain in a steady state. So to that aspect, I think the street probably has concerns. Whether we buy the dip right now, my own sense is that just wait for some significant correction if the market does give you that, because the structural story does continue in power, that theme from thermal to renewables, defense as a space as well. But selectively, I think at the current juncture, we remain a little bit more constructive as per our CanSlim approach on certain specific mid-cap PSU banks. So banks like Bank of India, as an example, is something that we are very, very bullish at Markets with India, because we still believe valuations are in the comfort zone and the risk reward probably offers a better perspective.
And what a spell by Mohammad Siraj. You know, as we were talking about Bajaj Auto and we were talking about markets, Mohammad Siraj has picked up 6 wickets. Wow. South Africa's 55 runs, 8 wickets down, guys. Wow. You know, people were talking about in the first test, India didn't have depth in their bowling. Check that out. 55 runs, 8 wickets. That's what we're talking about. Okay, let's wind up the market.
The mood is upbeat, despite the market mood not being upbeat, right? But I just want to point out at the end of trade, of course, it's been a very disappointing day for the bulls. We go home with losses of around 145 points on the Nifty. But if you look at the winners and losers, very interesting today what happened in the two-wheeler space. While Bajaj Auto was the biggest winner, Hero Motor was the biggest loser. So it's really interesting, right? I mean, Bajaj Auto sentiment was very positive. There's a buyback that they have announced. Growth is looking good. On the flip side, Hero Motor's numbers were weak, so the stock was down almost 2.5%. So that was one big takeaway. The other big takeaway is that the metal space has been under a lot of pressure today. So that gave back quite a bit. JSW, Hindalco, Tata Steel, all under pressure. down about 3 to 4 odd percent. And IT as well was under pressure. So Tech Mahindra, Infosys, Wipro, TCS were all under pressure today. But it's interesting. I mean, today was, of course, one day. Yesterday, you saw a bit of a downtick as well. The verdict is still not out on whether this is the start of some sort of a downslide. It's too early to take that call. But for now, one thing you can say is that the market has become a bit volatile and maybe a pause button has been pressed on the rally.
Oh, yes, absolutely. I think we need more clarity from global markets before we can, have a definitive answer to that. But quickly, mid-caps were better off. The mid-cap index is ending with a gain of about 0.25%. Some PSU names did well. NBCC, 9%. Aircon, 7%. Some of the banks were okay. Bandhan Bank, 5%. UCO Bank, up about 2 to 3%. Manappuram found some traction as well, 3% higher. And if you go beyond the volume charts, then some more gains. By the way, Subros has put on another 10%, I just noticed. It had a great day yesterday and today. So lots of buying on this one counter playing out. And then, of course, Sobha from the real estate pack did well. Overall, I guess mid-caps are fine, but I think we need more clarity on what the bigger large cap market move is going to be.
One more wicket is gone. 55 runs and 9 wickets.
Unbelievable. Okay. Well, we do have to take your leave on that note. It's curtains on closing bell, but don't go anywhere because all the market action continues. Up next is Markets Forward.